Hi folks, so we're here as part of our PDAC Mining Snap segment here at the PDAC. It's March 2nd on a Sunday. It is quite busy today. This is a gathering of exploration geologists, financiers from all over the mining industry all over the world. And one of those experts we have today is Jordan Roy-Byrne, who runs the DailyGold.com. Now he is a chartered market technician, member of the Market Technicians Association, runs the DailyGold.com website. Jordan, thanks for being with us today.
Sonny, thanks for having me. It's
Excellent.
My pleasure.
That's great. So let's start off with your background first, and then we'll go into the questions of what you've observed over the last several years. So let's go into a little bit about what you do.
Well, in my premium service, I like to say I focus on market timing and stock selection. So what we're trying to do is look at technicals and fundamentals. And my expertise is in technical analysis. I'm a chartered market technician. And so I use that to try and identify when are the high-risk times in the market, when are the low-risk times. And then on the fundamental side, look at companies, which companies I think are going to outperform, and then kind of match those two together to get superior results. Because some technicians, they say, I only want to look at the charts, but I disagree with that. I think you really need to look at technicals as well as fundamentals.
Excellent. Well, you know, you've written some really great stuff over the last few years here. And one of the things that I came across was an interview you did in May 2013. And what you had mentioned is that we experienced the largest selling climax of the GDX ETF, which is the VanEck Gold Miners ETF. And what happened here? And then, you know, it looks like we saw something in December again, another bottom there. So can you just explain what happened there?
Well, a lot of times when a market is in a bear market and as it's trying to make a bottom or towards the end of the bear market, you'll have a selling climax, and that potentially is the first bottom, and then there's a retest. And that retest, it doesn't always make a perfect double bottom. It can be skewed in either direction. And so the selling climax is when most of the stocks make new lows. And so that's, you know, for example, maybe you could say 70 or 80% of the stocks made new lows at that point. And then in December, you have fewer stocks making new lows. So
right.
A lot of stocks bottomed in late June. That climax ended in late June. It kind of began in May, if
right.
I recall. And then the retest or the final climax or final sell-off, that was in December.
Interesting.
And
okay.
it happens in a number of different markets. It's not just with the gold stocks or precious metals.
Right, exactly. Well, okay. And then can you also talk about this, you mentioned previously about an inverse correlation analysis that you make between the S&P 500 and the HUI index, which is the Amex Gold Miners, or the Amex Gold Index, sorry. Can you just talk a bit about that and the analysis there?
Well, the correlation between precious metals and the S&P 500 or the general equity market is very interesting because it's always changing. It's never static. Sometimes they go up together, sometimes they crash together, sometimes one is going up and the other's crashing. And since the summer of 2011, when we had our peak in precious metals, and at that time the S&P had a 20% correction, since that time the general equity market has performed fantastically and has risen to new highs, while precious metals basically continued, or they began a bear market and they plunged until December 2013. And so with this correlation, you can't really look at it day to day or week to week because on shorter time frames, they can trend together. You really need to focus on the long-term picture. And I believe the long-term picture is we're going to see the equity market top this year. And I believe we've already seen a bottom in the precious metals complex. And you know, people remember 2008 where everything crashed, but they don't remember there's many instances where the equity market enters a cyclical bear market, and precious metals have done very well. It happened twice in the 70s, I believe 76 to 77, and especially from 73 to 74, and also from 2000 to 2002 when this secular bull market got going. And I think we could see something like that again where we're back in a bull market for precious metals, and the fact that the general equity market is going to peak and enter a cyclical bear, then money is going to move out of that and come into precious metals and secondarily commodities.
Interesting. It's funny you mentioned those previous corrections actually, as that was my next question. But what are some of the similarities that we should be looking for from a technical analysis on those previous kind of cycles there?
Well, I have a slide in my presentation that I'll be giving, and I've also posted this chart numerous times with my public articles, and it's basically a bear market analog chart where I plotted the current bear market, or I should say the past one, since I believe we've ended the bear market. I plotted that with all the historical bear markets, and we were so close when we bottomed to the 1976 bottom in terms of price and time. And actually, when we had that bottom in late June, for the XAU, which is what I use, it was actually exactly where the bear market in 1970, 69 to 70 bottomed.
Right.
So when you look at these things together on a chart, it really gives you a lot of historical perspective. And looking at that, it tells us we just had a normal bear market. I mean, it's I'm sorry to say, but a normal bear market in this sector is 65% for the large companies.
Right.
And that's why a lot of companies lose 100% or 90 or 95%.
So what's your outlook going forward in the next 6 to 12 months then?
Well, in recent months, Sonny, as you know, I've been looking at the bear market analogs.
Right.
Now that we're in a bull market, I can look at, okay, well, how do all the bull markets perform? What happens after you have a major bottom? It's very interesting because most people, when a market has a quick recovery, they're scared. They think, oh, they're still remembering the past bear market of these terrible losses.
Yes.
And so sentiment is slow to shift. And people are kind of waiting. You know, they might see a stock that went from $1 to $2, and they really like it, and they just don't want to buy it because they're afraid it's going to have a big correction. But the fact is, all the research that I've done, I mean, where we are right now, we're only 2 months since the market bottomed, and the outlook is very, very positive. When I look at 6 major bottoms in gold stocks dating back to 1960.
Wow.
The time before they have more than a 20% correction is more than a year, and the market's already rallied 100%. So if we get the corrections are going to be small. They're going to be maybe 12%, 14% in the next year. So I believe that this is going to be a very, very good year. That's what the research tells me. So I'm very optimistic, and I don't think a lot of people. Some people may be cautiously optimistic and some people are still skeptical, but I don't think most people are that optimistic. And I'm just looking at history and looking at these analogs, and that's what they tell me. And I do think the stocks are going to continue to outperform the metals. Yes. So I'm more bullish on the stocks than I am on the metals at this point. Remember, the stocks led this bear market down, and that's why they're outperforming now. They're leading the recovery.
Excellent. Well, that's why we're here at the PDAC, to find those answers. So thanks for joining me, Jordan. Now, how our readers can, or our audience can get in touch with you is through the dailygold.com.
Yes, sir.
And they can subscribe to your service there.
Yes, sir.
Excellent. Thanks, Jordan.
Thanks for
having me. Have a good show.